One thing I see as a big question mark now that we've had such massive losses with all of the fires in the LA area is what happens to your property taxes and what happens to your mortgage whenever your house completely burns down, or at least if it's partially burned down and it's unlivable. Because it's not really fair for you to have to pay your property taxes in particular, right? If you have nowhere to actually live, what are you actually paying for? So this is actually something that's come up a lot. So I thought it would be a good idea to look into how they're handling this over there in LA. And hopefully everybody watching will never ever have to deal with a situation like this, but at least if you do, you get an idea of how a situation like this might work. So one thing that they're doing in LA in particular is they have a form that you need to fill out as a homeowner if you've experienced one of these losses called a misfortune and calamity form. This will essentially help you get your property taxes lowered pretty much immediately. Now, if your house burns down and there's no structure left, it will be valued at zero. And right away, that might make people excited and happy that, wow, you know, I'm not going to have to pay property taxes if my house is valued at zero. Not so fast. And the reason is because there will be no reduction on the actual land value, which is absolutely insane, considering that the land is completely unusable at the moment while it's burnt down to the crisp. That land is essentially unusable until protocol goes into place of what needs to happen to this land to clean it up properly in order to rebuild a home on it. So for the county of LA to say that there's going to be no reduction in the property taxes as far as the land value, this is a crime, okay? And the reason why it's a crime is because a lot of these people are in a situation where the land is 2/3 of the value of their property tax assessment. So these homes that are completely gone and the people that own them are essentially going to be on the hook for still paying over 60% of their current property tax bill, even with no house on the property, even though the land is essentially worth zero at the moment, because you can't rebuild on it until you get the okay, right? Until this whole situation is over with, until you can clean it up. So for them to sit there and tell you that you have to pay 2/3 of your property tax bill on essentially a worthless piece of land for now is criminal, if you ask me. And obviously, the higher your taxes were prior to the fire, then the higher taxes you're still going to be paying, even if there's no home there anymore. Like here in Florida, for example, how they work it is if your house is destroyed in a hurricane, you can apply to get a refund of some of your property taxes that you paid now that the house is destroyed. But just like California, you still have to pay property taxes, and it's probably going to be assessed based on the land value. And unfortunately, in all these very expensive areas, most of the value lies in the land. But it's interesting because what is land actually worth when it was just ravaged by a fire or ravaged by a hurricane? How valuable is that land truly? Now, one thing that somebody sent me was a question that I saw going around on social media, which was, if you don't rebuild your house in California within 2 years, then you will lose your Prop 13 tax basis. But so far, from what I'm looking at, I don't think that's actually true. If it is true, somebody please put the reference in the comments so I can take a look at it. I don't allow links, so you can't put a link, but mention where I can find it and I'll check it out. But according to the local officials in LA, they're telling people that you can still keep your Prop 13 tax basis from whatever it was before the fire occurred, and you're even allowed to build 120% of the value of what was there before without a reassessment. So they're throwing people a small bone, you know, allowing you to maybe add a little bit of extra square feet or a little bit of extra something to the house when you're rebuilding without having to worry about your property taxes going up. And also, it's important to keep in mind that even with seeing a small reduction in your property taxes due to your home being lost in California, this reduction is only going to be temporary under Proposition 8, because basically what that is a temporary reassessment if your property is substantially damaged or the value of the home declines due to market conditions, something like that. So this lower assessment is only going to apply while there's no home on that property. So the long and short of it is you still have to pay property taxes, and it's still going to be a pretty substantial amount if you were paying a high amount in property taxes before. And this really hurts people who are seeing losses on a smaller scale, right? The people who don't live in the wealthy areas that lost a house that maybe is worth a little over $1 million now in California, and they're already struggling to make ends meet, and now you have to pay property taxes and a mortgage, by the way, which we'll get into in just a minute, on a house that's not even there anymore. Which brings me to the next thing. Do you still have to pay your mortgage? And I just hinted at it. The answer is yes. Anytime there's a disaster, guys, it doesn't matter what kind of disaster it is, whether the house is gone because of a hurricane, it got burned down, flood damage, whatever, you have to pay your mortgage. Unfortunately, this does not get you off the hook, which is one of the worst parts about having a mortgage, because these events are completely unforeseen, right? And while your insurance may cover some of your payments in the meantime, obviously it's going to take time to go through the claims process, so you're stuck paying until you can get something done about it. And if you don't pay, they will still foreclose on you. So don't think for a minute you're off the hook just because your house is gone. That's not how it works. The only thing you can do is you can talk to your lender about the situation, and they'll likely set you up with a forbearance program just like what happened during the pandemic. But that's not really a great solution either, guys, because like I've mentioned here on the channel before, when you go into a forbearance with your loan servicer, all that's happening is your payments are being put on pause. They're not being forgiven, and your loan is still accruing interest in the meantime. So if you look at whatever you still owe on your home at the time you go into a forbearance, and say you come out of it 6 months to a year later, you are going to now owe more on the house than you did before you went into forbearance, simply because the interest is still going to be accruing during that time frame. So those are all unpaid interest payments that are just sitting there accruing interest. And because your balance is going up, just like when you have money in a savings account, you're now paying interest on the interest. So you get hit with a double whammy when you're in this situation. So a forbearance is not a great place to be at, regardless of what happened. I would still be making the payments if you can, but obviously if there's no way you can, then a forbearance is a good temporary solution, but try to keep it to a minimum. The quicker you can get out of that forbearance and get back to making mortgage payments regularly, the better off you're going to be. Which is why a lot of people, once they go through one of these big natural disasters, they end up just selling. Look at how many houses are for sale where we got hit with the hurricanes this previous summer here in Florida, because a lot of people cannot withstand the financial blow that this brings to them. It turns out that in areas that burned down like this, because obviously these fires were very severe and entire neighborhoods were lost. When you have severe wildfires like this, in the 3 years following the fires, home purchases decreased 38% in markets directly hit by a fire. And in adjacent markets, meaning the ones that are near a fire, home purchases decreased by 3%. So it kind of scares people out of buying in the area, and rightfully so, right? And when sales go down and inventory is up, what happens to prices? Well, they come down. Check it out. This house sold back in 2014 for about 1.7 million, and then they listed it for sale back in October of this year for 7.95 million, and just lowered the price about $1 million, because now they're down to 6.99 million. So $1 million price cut, guys. That's the kind of thing we're dealing with over here in Miami. $1 million price cut, and I'm sure it's still going to take forever to sell this house if they ever do sell it. How many people realistically have $7 million to drop on a property like this? And these guys are paying $38,000 a year in property taxes. They're lucky paying that price because they bought the house for 1.7 million. So they were able to lock in a homestead exemption way back then. Somebody buying this house today would be paying well into the 6 figures. Now, another thing that they're doing in California, supposedly, which I'm happy to see, but I'll believe it when I see it, is Governor Newsom signed an executive order to help people rebuild their homes a lot faster. They're going to be suspending the CEQA review and California Coastal Act permitting for reconstruction of properties substantially damaged or destroyed in the fires. They're also going to be directing state agencies to identify additional permitting requirements, including provisions of the building code that can be safely suspended or streamlined to accelerate rebuilding and make it more affordable. They're going to be extending their price gouging policies on building materials, storage services, construction, and other essential goods and services to January 7th, 2026. So basically all these things are kind of price capped for a year using their price gouging laws. And they say they're going to commit to working with the legislator to identify statutory changes that can help expedite rebuilding while enhancing wildfire resilience and safety. So if anybody in California is going through this and you have some experience with it, feel free to write me an email and let me know how it goes. Now, we already know that the real estate market in general is in decline. We've seen sales now hit 30-year lows in terms of how many sales are transacting, and that's starting to now bleed over into the National Association of Realtors membership, because it just recently dipped below 1.5 million, and in December the NAR lost an additional 25,336 realtors. Guys, that's a lot of people out of business, right? Now, that doesn't necessarily mean those people have no income, since a lot of people do this part-time. They might have another job or something that they're doing instead and deciding to quit and not be paying, $700, $800 a year in MLS dues. But that just goes to show you the decline that we're having right now in real estate is significant. Almost every single state in America actually reported declines in membership in December, except for Utah. They were the only state that added 74 realtors to its member count in December of 2024. So things are falling off the wagon, guys. In fact, some states saw some massive declines in people leaving the business, like Rhode Island, Wyoming, Vermont, Colorado, Louisiana, and Virginia. They saw more than a 5% decline in real estate agents in these states. So people are really getting hit with this economic slowdown and are being forced to find a new way to make a living. It just is what it is. The National Association of Realtors expects further declines into the future. They recently did a survey of all the local MLS associations, like we have one here in Miami, for example, and they have them all over the country. And 70% of local MLS associations are budgeting for a projected decrease in membership, citing a combination of external and internal factors. Yeah, that's code for real estate sales are slow, and what are you going to do? So some local associations think they're going to lose anywhere between 1 to 10% of their members, and a small chunk of them think they're going to lose between 11 and 20% of their members. I wouldn't be surprised if we just keep seeing the realtor numbers drop due to how slow the business is. There's really only so many deals to go around, guys. You can't make a living off of only selling a couple houses a year unless you're selling houses like this one we saw over here that are $7 million. Then yeah, you can make a living off of selling a couple of those, maybe even just one. But obviously that is not the case for the vast majority of agents. You need to be in the game. You need to be transacting regularly in order to make a living. And as sad as the fire situation is, like I talked about in my last video about the fires, this is probably actually going to be a good thing for real estate agents in the LA area, because a lot of people are going to be looking at selling these plots of land, especially since the rebuilding process can be daunting, can be extremely expensive. They're stuck paying the property taxes and the mortgage without a house on it. How many people can really afford that? And then of course it helps the local economy in other sectors as well. If land is sold or halfway destroyed homes are sold, then You're going to have contractors being hired to rebuild those homes, and that's going to create jobs. It's going to supply work to people in the area. But obviously, the last thing that people who lost a home in a fire are thinking about is how well this is going to do for the local economy. I totally get that. All I'm trying to say is that there is usually some sort of silver lining in everything, no matter how horrible it is. Now, apparently, it's not just people here in Miami that are delusional with what they want to get for their homes once they buy it and put it back on the market and try to flip them. One of my viewers sent me this listing from New York I wanted to share with you guys because they bought this house just back in September of last year for $300,000, guys. Literally a month later, so you know they didn't renovate, they didn't do anything to, substantially increase the value of this house. What do? They turn around and list it for sale for $650,000, and then they cut the price down to $620,000. Like, oh, that's gonna get it sold. Like, no one is going to look at this and say, oh yeah, that's the house I want to buy. And this is funny to me for a couple of reasons, because number one, people who are doing this and behaving like this still think that the real estate market is, on fire and they can get away with shenanigans like this. And I understand that New York is in the Northeast, and if anywhere they might be able to get away with it, it would be there. That's one of the last places left in the country where the market's still hot. But I don't believe it's hot enough where people are going to be dumb enough to walk in there and pay double for these houses. And speaking of selling houses, there was a recent survey that came out from Redfin which said that more than 1/3, actually it was 34% of US homeowners surveyed said that they will never sell their home. Now keep in mind, guys, this survey was done on barely a little over 400 people. And, I like quoting these surveys because they're interesting. It's interesting information we get to take a look at here on the channel. But are you really telling me that 400 people taking a survey corresponds with what the entire country feels? I don't think so. I think they just do things like this to make headlines, but it's interesting nonetheless. I mean, I can put up a survey on my channel and get thousands of responses, which would be technically far more accurate than whatever Redfin did here. But nonetheless, their information says that 34% of people will never sell their home, and another 27% say they wouldn't consider selling for at least 10 years. And about 25% of people surveyed said they plan to sell in 5 to 10 years, while 8% plan to sell in 3 to 5 years. And the remaining 7% said they plan to sell within 3 years. And basically, the older you are, the more likely you are to lean on the side of saying, I'm never gonna sell, or be on the higher side of this, like maybe in 10 years or so. But they say things like this in order to try to get people to believe that there's not gonna be any inventory coming up on the market, but that couldn't be farther from the truth, guys. The inventory is pretty much at pre-pandemic levels already right now, and we're not even seeing a major crisis in the housing market just yet. We're not even seeing the major demographic shifts that are going to be inevitable, where you're going to see a lot of older people who own these homes passing away and passing them down to their children, who most of them will end up selling these properties. And of course, you have to understand that the current market conditions are going to reflect people's sentiment about what they're going to say on the housing market, right? Because it's not a great time to buy at all, because home prices are still near record highs and interest rates are still hovering well over 7%. That's not an enticing environment for anybody to say, yeah, I think I will sell and move to a new house. So I thought it was also interesting to take a look at the reasons people say that they're not going to be selling. Here's a chart from Redfin that shows you people's answers. My home is completely or almost paid off. Those are going to be a lot of older people who are answering that. If you just bought a house a few years ago, your house is not almost paid off. Other people said, I just like my home and its location, have no reason to move. Home prices are too high now is pretty high up on that list. I do not want to give up my low mortgage rate is high up on that list. And my children or other family members are still living in my home. I don't want to pay high homeowners association fees, which is a legitimate concern because a lot of new homes that you're going to be looking at today are in HOAs. Insurance for a home would be too expensive where I would want to live. So people are choosing to stay put in more affordable areas. Makes a lot of sense. And hardly anybody says this, but it's a small part of the response. I have given money to children or another family member for their home, so I can't afford to move. Well, that kind of sucks. But the interesting thing that starts happening with human psychology and the housing market is once people start seeing a lot of homes coming up for sale all of a sudden in their area, and they start seeing their neighbors having to slash the price on their home, people that previously said they weren't planning on selling now might be reconsidering that, because they may be looking at this and saying, if I don't sell now, then I might not be able to get what my house is worth. So I might as well sell now and take advantage of the prices of where they're at while I still can. So it creates this loop where a lot of people list their home for sale in hopes to, gain most of that equity out of the property before it's too late. And then inevitably what happens is it becomes a race to the bottom. So we're gonna see a lot of interesting things happen with this housing market over the next couple of years, guys. This fire in LA really just threw a wrench in things over there for sure. But with the amount of real estate agents that are quitting right now, with how slow home sales are, and with how stubborn people are about wanting to move right now, we are truly in a situation where you're just gonna have to see things get worse before it gets better. The sales are gonna have to slow further. The inventory is gonna have to build further with further price reductions if we wanna see any improvement in the current situation at all. And that's why you're seeing programs like this one. One of my viewers, Jonathan, sent me this from the USDA. They're gonna be allowing people who wanna buy a manufactured home to essentially be putting 0% down starting in March of this year. So it looks like we are just destined to repeat all of the same mistakes that we made during the last housing bubble, during the last financial crisis, where we just allow a bunch of people to buy homes that really can't afford them and just see what happens. Well, what's gonna happen is a lot of people are gonna end up losing those homes, and it's just gonna exacerbate an already weak housing market when they too are inevitably forced to sell because of the rising cost of home ownership. So if you guys enjoyed this video, make sure you are subscribed to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.